Crypto versus stocks, which is better? Welcome back, guys. In this video, we'll see which one is better between the stock market and cryptocurrency market. We'll also talk about is there any connection between the stock market and cryptocurrency market. So today's video is going to be explosive. Make sure you watch the video till the end. Let's jump right into it. Stocks and cryptocurrencies are dramatically different investment assets. While both are generally liquid assets that belong in the speculative side of your portfolio, the similarities end there. These are very different types of securities and belong in very different parts of your portfolio. Here's a summary of these two types of securities. A financial advisor can help you decide whether either or both of these are a good fit for your portfolio. What are stocks? Stocks represent ownership in a publicly traded company. Each share of stock you buy confers a percentage of ownership in the company itself. You receive this ownership in proportion to the number of shares that a company has issued. For example, say that XYZ Corp releases 50% of its ownership in the form of 50 shares of stock. If you buy one of these shares of stock, you will literally own 1% of XYZ Corp, while uncommon. When a company has released more than half of its ownership in the form of stock, it is possible to acquire the firm simply by purchasing enough of its stock. An investor can make money by selling their stock shares to other investors. This is known as capital gains, the difference between what you paid for the asset and what you get from selling it. Beyond that, the benefits that you get from owning stock depend entirely on the individual company involved. Stocks can also gain value by paying dividends to their investors through voting power held by shareholders and by other rights of ownership. Every individual company is different in terms of how it handles issues like dividends and shareholder voting rights. What are cryptocurrencies? A cryptocurrency is a purely digital asset. This means that it has no physical component, but rather exists only as entries in an online ledger recording ownership. This is, for example, as opposed to the US dollar, which has both a physical component. You can withdraw and hold a dollar bill, and a digital component. You can own a dollar as nothing more than an entry in your bank account recording that ownership. The individual unit of a cryptocurrency is called a token, in the same way that the individual unit of a stock is called a share. Cryptocurrencies come in two main varieties. Some, like the well-known Bitcoin, are intended as pure currencies. They exist only for people to trade, buy, and sell. Others, like Ethereum, are what is known as a utility tokens. These currencies function as part of a more complex piece of software, although utility tokens are also meant to be bought, sold, and traded. Now, which one is better, crypto or stocks? As with so many investment scenarios and decisions, the short answer is that it depends. In this case, it depends on your risk tolerance, age, investment goals, and disposable income, among other things. Both cryptocurrencies and stocks present viable, profitable returns for investors, while both carry certain risks, some of which are specific to each. When devising your investment strategy and portfolio, you don't have to make an investment decision based on an either-or proposition. In other words, crypto and stocks are not mutually exclusive. You can own crypto while also owning stocks. In fact, owning both is an excellent way to diversify your portfolio. For those traders who are either skeptical or concerned about crypto's volatility, you can always test the waters by splitting the difference and choosing a cryptocurrency exchange-traded fund. As US News and World Report writes, exchange-traded funds are some of the easiest ways for investors to gain diversified exposure to a particular theme or asset class. One of the challenges of investing in Bitcoin and other cryptocurrencies in the early years of crypto was figuring out exactly how and where to buy them. Cryptocurrency ETF make it just as easy to invest in Bitcoin as it is to buy popular stocks. There are now several cryptocurrency-themed ETF out there, and that number continues to grow. Is there a connection between the stock market and cryptocurrency? No, it doesn't work that way. Crypto does not follow the stock market, even though their connections within the overall economy have grown and are expected to continue to grow. Cryptocurrency trading takes place entirely within its own marketplace. Consider two countries that speak the same language and are located next to each other. They communicate with each other. They collaborate on economic projects. Their two cultures are most likely linked by a historical bond, making them more similar than they are different. They have similar governments and share many of the same social values. Many people have dual citizenship, and families are split between the two sides of the border. Their legal systems are similar. They do, however, have two sovereign governments. There is no way for one country to exert control over the other. That is the essence of the relationship between cryptocurrency and the stock market. It is similar to the relationship between those two nations. As a result, their trends are unrelated. So, while crypto is not immune to the effects of the stock market, it does not follow its trends. And crypto is not directly linked to the stock market. It is not bound by the stock market's 9:30 a.m. to 4 p.m. EST schedule. You can trade cryptocurrency at any time. So hopefully you did enjoy today's video and found some value. Leave a comment on your thoughts about these two different markets. Also, don't forget to subscribe and turn on the bell icon for more videos like this one. We will see you in the next video.